pleased to be invited to moderate. My name is Daniel Sneum. I am from Energy Modeling Lab at Lund University, Denmark and Sweden. I will shortly go through quickly the agenda for today, and then present the presenters in more detail when they start giving their talks. I took my PhD in district heating, and I'm very pleased that we have investors here. And before you start shaking your Rolexes at me in anger of me not being familiar with the jargon that is in investment, I want to turn this around and say that this is a pleasure to actually meet between the different sectors, the district heating sector and the financial sector, because I find this quite important to accelerate the deployment of district heating and cooling. A bit of housekeeping. For the presenters, I will let you know 3 minutes before the end of your presentation. If you do finish before, we have time for a few questions. But let's see how it goes. But I will notify you so you have a feeling of when to finish. In terms of the online participants, hello, we have I think triple the amount of participants online than we have physically, which is really nice. So we have engagement in both places, and for the online participants, you can note down questions or ideas on the Miro whiteboard, I'm told. So please, if you have anything, just get in touch on the chat or the whiteboard. We have at least had some issues with Wi-Fi, so also for the online participants, we may have some lag in the connection, but please let us know and we'll make sure that everyone are connected. It may be necessary, if we have questions from the end of the room, we need to repeat it for the online participants so everyone can hear it. Let's see how it goes, and I may get so engaged in the dialogue that I forget, so please remind me if I do. And I think I will stop talking and just present you the agenda briefly. First, we have Mr. Mardis Lamiste from the European Commission. We have Tobias Popovic from HFT Stuttgart. We have Lene Winton coming from Kommunekredit, possible bond finance, credit finance. We have Sebastian Glock from the fintech industry. We have Bedar representing the pension funds, and Tim Okenga representing the insurance side of things. Then Christina Lyngerud will present a bit on the research side, so the academia side of things. And then Chris Garside will provide some policy recommendations or discuss policy recommendations before we enter into the workshop that will end the day, where we will split out and have discussions and thoughts about how to improve and how to accelerate the collaboration between district heating and cooling and the financial side of things. But let's just get started. I would like to invite Mardis Lamiste to be here physically or be joining online. I was told you will be here physically.
Yes, he was supposed to join physically.
Okay. He may be coming shortly. I propose just to let the switch around a bit. So perhaps Tobias, would you be kind enough to join us on the floor instead, and then Mardis can join us later. Good. Tobias Popovic, just a brief introduction, is from HFT Stuttgart, so coming from the academia side, summarizing findings from the REWARDHeat project, and also providing some bridge building between the regulation and the financial side of the district heating and cooling sector. But you can fill in the blanks yourself, I hope.
Yeah, thank you very much for having me and for introducing me briefly. And one question, organizational-wise, can I fix with a slide? Can just go over to the presentation. Just with the arrows. Yeah, so from my side, a very warm welcome to everybody. I'm happy to have you here. We're happy to have this, workshop with you as a hybrid event. And so my task is to tell you a bit about the lessons learned over the course of the project from the financial side, of our financial instrument side and investor side. And the key question was how to drive investments into district heating and cooling networks. And of course, we have a very diverse landscape all over Europe. So it's quite a challenge to develop solutions because they all have to be customized, because district heating basically is a local issue and very much depending on the local geographical, but also climate conditions. I will briefly start with a short introduction, then I will discuss with you the question of regulatory tailwind or jungle, maybe, and confusions that are related to the background. Then, secondly, we will have a brief look at current district heating structures when it comes to financing, and later on, and that will be the core of the presentation, more innovative approaches, looking forward, and that hopefully will provide some tailwinds to the rollout, the European rollout, and of course, we will have a short conclusion at the end. All right, so first of all, as we all know, the climate change is one of the so-called grand challenges, and time is running out. Listen to the climate sciences, so it's time is running, and we definitely need to get on track following the United Nations SDGs in order to get the so-called great transformation done. This great transformation consists of different transitions, and the heat transition is part of the energy transition. Is a very important one because it's a very carbon intensive issue, and we need to drive down the carbon footprint. If we succeed with this great transformation, or we want to succeed, we need to transform our societies and our economic systems. So from a German background, I would say we need to transform also social market economy into a social ecological market economy. And that means also that the companies need to be transformed into a more sustainable one. And for example, the Corporate Sustainability Reporting Directive, CSRD, from the European Commission is heading in this direction. So basically, companies are now forced to transform themselves. But this needs a whole lot of investments, trillions of investments. McKinsey said at least for Germany, we would need until 2045, like 7 to 10 trillion. So it's a lot of money, and a large part of it needs to flow into the heating system, for example. And the question is where the money comes from. And the good news is that sustainable finance is basically the market segment where the money could come from. And the regulatory side, for example, the European Action Plan of financing sustainable growth, the Green Deal, the taxonomy, they provide some kind of guidance and orientation. But the question is if we are already there or whether modifications to the regulatory environment are needed. Yeah, I already talked about the figures, and we have a huge financing gap because we need to achieve the 1.5 degree Paris goal in 2030. So that means that we would need to invest at least, let's say, 5 trillion per year. But the problem is that we have been investing just, for example, in 2022, just a third of it, or maybe 25%. So the funding gap is rising, and now the question is how to close the funding gap. But the good news is that the money is there. For example, looking at figures from the members of the Glasgow Financial Alliance network for net zero, the money is there with the financial institutions, but it only needs to be channeled into sectors like district heating. Maybe to summarize it a bit, so the money is there, but not on the public entity side, because governments all over Europe, be it on the local side, be it on the state side level or on the federal level, they are basically over-indebted. Debt levels are too high, so public institutions won't be able to finance it. So the only solution is opening up financial markets. And for example, if we turn over view to Germany, we have this called Climate Transformation Fund. There's only 750 million dedicated to district heating. but we would need at least, very least 30, rather 100 billion until 2030 for the heating sector. So the question is how that fit together and how we can fill the funding gap. Now the view on the regulatory tailwind. So first of all, the action plan, which you see here at the right-hand side, and the taxonomy and the CSRD and the SFDR are parts of that. So that is in principle providing tailwind for that, but the problem is that it's not really coordinated with other regulatory activities when it comes to energy efficiency, for example, which we have on the right-hand side at the top, or the renewables directive. So what we desperately need in order to get more tailwind here is better coordination on the regulatory, on the political level of all these activities. Otherwise, that's what I hear from practitioners. That's a jungle, basically, regulatory-wise, and it's creating lots of bureaucracy, and we need to come to leaner solutions and in order to accelerate things. All right, what we did over the last few years quite some things together with our partners, the demo sites, when it comes to the financing structures. And what I said at the beginning, the district heating networks are very diverse, and so are their funding structures. So they are very widespread, but what we found is some kind of common denominator is, for example, when it comes to the large utilities like E.ON for the European activities, they are issuing green bonds for all over their sustainable activities, and they are channeling a small portion into district heating. The same is true for A2A, for example, in Italy, and they have been also receiving funds from the European Investment Bank, for example. That's also some part of the financing, but also green bonds is what quite some money comes from. And also, since we're here in the EDF premises, EDF in France, they are also issuing green bonds and channeling some of the money into district heating. But it's just one minor part of their activities they're doing altogether. What I personally consider some kind of role model that could be multiplied in different European countries is the platform Kommunekredit, which is in Denmark, basically financing the local municipalities and also the district heating networks. And that's why I'm particularly happy that we have Helene Winden here today. She would be presenting more details on how that works, and especially, for example, thinking of Germany and the large rollout which is starting next year with district heating. I would say this is something we would be needing in Germany, but I think it could also be a role model for other European countries. All right. What we also developed over the course of the project is basically a framework how to get, from an engineer's point of view, basically, from the technology to the funding. So the first step, of course, is that you need to get the infrastructure running. It needs to work. Based on the infrastructure, you need, for example, using a business model canvas to develop a business model. Once you have the business model, you need to convert it, to translate it into the investor's language, and to make an investment case out of it. And we developed a tool, a scorecard called, which provides the KPIs for return, for risk, for liquidity, and for sustainability. For example, taxonomy-related carbon data and KPIs, so that investors at first glance see whether it's interesting or not. And then, for example, hopefully it will contribute to attracting investors. And once this is successfully done, then of course it has to be agreed on the financing instruments. Some financing instruments we've already seen, the green bonds, but that's only one part. You don't need to worry. I don't want to walk you through every single detail here. What I want to highlight is that, first of all, every infrastructure project has different life cycle stages. And every stage, especially the first two ones, are, from an investor's point of view, high risk stages. So that's basically where they are not very inclined to get into. But the problem is with district heating, looking at the European rollout, most of the projects are either in the development, investment phase, or the construction phase. So that's where the largest part of the money is needed. And where, for example, long-term investors like pension funds and insurance funds would be interested to go in there, because they are also invested in long-term cash flows, but the risk is keeping them out basically. And that's why we developed some kind of a blended finance approach. And I will show you the details in a minute. So hoping that blended finance on a European scale might make it easier to accelerate the funding process. That's basically a broad outline, a matrix, bringing basically the investor side and the financing instrument side or dimensions together. And we see some clusters here. For example, once again, talking about Germany, the municipal utilities, Stadtwerke, they have turned from cash cows to cash grain. They need equity. So the question is how to get equity in there. But for example, most of them need basically loan financing, especially the running ones need loan or bonds. So green bonds and ESG-linked bonds, sustainability-linked bonds would be very useful instruments, but you can see it from the symbols. Blended finance would basically work for everything, and why I'm going to show you in a minute. All right, so blended finance, what is this all about? Basically, we have three different also stages, funding stages, and the most important thing is that at some point of time, public support at the very beginning comes in. That might be that, for example, the public institution provides guarantees. It provides basically first loss pieces or takes subordinated roles. So they get in there first, and by getting in there first, they take the majority of the risk. And that contributes to de-risking, and de-risking optimizes, improves the risk-return relationship for commercial investors. So the key idea is by de-risking to mobilize private capital on financial markets and to channel it into the district heating networks, and at some point of time, hopefully being successful, that will lead us to the bottom line, positive results, achieving the SDGs like the 1.5 degree target, and also looking at the taxonomy. So that should be basically taxonomy aligned investments that should be possible here. But the big but here in this question is we do not have a framework, a European-wide framework for blended finance now. And I think that would be some recommendation, policy recommendation we would like to provide, that we need more support on a European scale on regulatory framework for blended finance. I'm very happy that we also have Tim Okenga later speaking to us from the German Insurance Association. He's one of the co-authors of a paper I just put under the major findings here in this short table. And basically, I was very positively surprised reading that at some point they say, and that's what I added blended finance here, but at the bottom they say public and sector involvement is what is needed, especially when it comes to infrastructure umbrella companies with public participation. The same would work basically also without public participation, but that's going back. The problem is that there we wouldn't have the de-risking, and the de-risking is a key issue, and that's why I added to what they wrote as a question mark here, that blended finance might be one of the solutions coming in. They came also up with other recommendations like municipal loan bundling when it comes to green bonds or green loans, alternative funding structures, alternative investment fund structures, especially when it comes to infrastructure funds. And so that's more or less in a nutshell, but maybe Tim Okenga can say something on later, more details on this issue. One further aspect or ambition of the European Commission is also to mobilize retail investments from retail investors. And one issue we have is that many people want, retail investors, retail clients want to invest in infrastructure, but they simply can't right now. And on the other hand side, we have the funding gap, and these so-called long-term investment infrastructure funds basically would also be one vehicle that hopefully could or can contribute to mobilizing capital. And when it comes to, for example, publicly owned municipal utilities on the regional level, In Germany, we have some kind of a problem here with the funding. I outlined at the beginning. Here, another alternative way could be to convert them into energy cooperatives. And for example, when it comes to the electricity transition in Germany, that worked really well. We have like 1,000 or 900 something like that electricity energy cooperatives, and so why not transfer this idea to the heating sector? All right, now let's turn our view to the conclusions. So basically, we need a more holistic approach, bringing together energy efficiency and renewables and financial markets and technology. Maybe it could also be an approach to think of city districts as investment objects and having the cooperative idea in mind as ecosystems for innovation. We should, on the European level, prioritize the heat rollout, heating rollout, and secondly, focus on refurbishment. Because if you have let's say, in an ideal world, if we have a zero carbon energy supply, so the energy efficiency with single buildings is not so important anymore. We need to harmonize and coordinate the different regulatory bodies, different directives, for example. Data is one of the key issues also. That's also what we heard in expert interviews from the United Nations. Data are the three more important things. And maybe I just get to the end. So innovative financing instruments might lead the way, but again, we need a framework for that. Blended finance is one approach, and nationwide agency platforms like Kommunikredit could also lead the way. Some of the things I just told you are summarized in a publication that just was published in the Smart Energy magazine. And at the very end, I would like to invite you either at the end to actively provide your post-its on the whiteboard, because we prepared some questions you might have or recommendations. So we would like to collect them on the whiteboard. And to the ones who are online, we prepared the same in Miro, but the ones here in the room can also use a Miro board. And throughout the meeting, you can write your post-its and take your time, and we would be really happy to collect some feedback from your side. So thank you very much, and I'll turn over to Danny once again.
Now we have the pleasure of being joined by Alice from the European Commission, who will tell us a bit about, or an update on, the current regulatory environment, which I'm looking forward to. And I find this, as Tobias just mentioned, we will have an exercise in the end of today. And this is perhaps a good outset for the discussions later in the afternoon. So this is your homework for later.
Thank you. Yeah, thanks for inviting me, and pleasure to join this workshop today. I'm Madis Aniste, coming from DHC Energy, from the energy efficiency unit, and my background there is purely technical. I'm working with the heating and cooling related issues in the energy efficiency. These questions that are related to the financing are by my colleagues who are working in the financing team. I'm in the general policy team in the energy efficiency unit. So what I planned to talk today was about district heating, about the regulation, supportive policy, and also the financial frameworks we have available or that are in the pipeline in our activities. Although the weather outside is suggesting that it would be more appropriate to talk about district cooling, but this time it's about the district heating still. But yeah, moving on the slides, why we're working with the heating and cooling issues in general. So what's our ambitions for the future? First of all, we have clearly defined targets for 2030, and these are the renewable energy targets that are particularly relevant for the heating and cooling sector. As you can see, still the majority of the energy comes, the heating and cooling comes from the fossil energy sources, approximately 75%, something like that. And in the district heating, the situation is a bit better. So active in this industry are saying that approximately 40% of the energy is coming from the renewables in the district heating sector. So it has been developing a little bit better than on average the heating and cooling sector in general. Secondly, what's important from our point of view is that in the future, when we are striving our energy efficiency ambitions and trying to make the economy and the society more energy efficient, then it's very important to ensure system integration across the economy and the different energy sector pillars. It's that this is one of the challenges what we have in the district heating to integrate the heat flows or the cold flows from other sectors in the heating sector and using thereby raising this system efficiency across the system in general. So this is the big challenge what we have in the heating and cooling field. And it's also important to remind the most recent energy crisis we had in Europe and are still having. It's about cutting off from the Russian energy supplies, and this has quite significant implications for the district heating sector as well. And district heating sector is one of the key sectors that can deliver these ambitions and reduce the supplies from Russia in the future. So but when we come to the district heating sector, what's important to remind is that district heating is not evenly distributed across the EU. We have specific countries where this role of the district heating is particularly relevant. So, namely, I would tell today Poland, Czechia, Germany, and Finland, what are most dependent on the fossil energy supply in district heating so far, and these are the countries where we have particular focus in doing the reforms in the district heating and cooling sector. So other countries also have, to some extent, supply in the district heating, but their own heat generation. But these four ones, what I mentioned, are the particularly crucial countries in terms of future progress. So this was a little bit about the background of why we are targeting the district heating sector. I'm going to tell what are these key measures what the EU has. What are there in order to achieve progress in the district heating and cooling sector. So first of all, there is Energy Efficiency Directive, and it's establishes clear planning practices that member states have to implement in the countries. And secondly, there are also certain requirements specifically about the district heating in general and how to ensure that the efficiency of the district heating systems and cooling systems increases. So regarding the planning obligations, what are arising from the Energy Efficiency Directive recently adopted by the Council and Parliament, is the first important requirement for the member states is to establish to conduct a comprehensive analysis in the heating and cooling sector. This plan or this assessment should identify what are the options to develop efficient district heating and cooling states, and what are the options to develop a high efficiency cogeneration in the states. And thirdly, what are the opportunities to integrate more renewables in the district heating and cooling in general. So this has prevailed since I think the first similar assessments were required according to the cogeneration directive that was already adopted in 2004, but now we have more comprehensive requirements on the content of the comprehensive assessments, and there is a requirement that this should be included in the National Energy Climate Plan, ensuring that there are clearly identified measures in the heating and cooling sector, and these measures are also reflected in the national energy and climate plans. So meaning that these measures that are there are actually delivered by the member states. So before that time and before the adoption of this directive, this link between the comprehensive assessments in the heating and cooling sector and the national energy climate plans was a little bit weak. So, but now we are trying to strengthen this link between the analysis and the assessment in the heating and cooling sector and the general energy policy. So second important requirement what we have is about local and heating cooling planning. So this concerns the municipalities that have the population above 45,000 inhabitants, and roughly 1/3 of the population in EU is living in the municipalities that have such population. There is approximately 1,300 municipalities that are above this limit in EU. And there has been a quite careful analysis made by the energy cities. What's the situation with energy planning across the EU? And you can see that there are quite big challenges ahead of us when we are trying to implement this practice across the member states. And this is an area where the work by the member states can be significantly improved. There are practical plans in the level of the municipalities and the big cities that will help us to deliver long-term targets in the climate and energy field. The second set of the requirements is arising from Article 6 of the Energy Efficiency Directive, and this sets the minimum requirements for the efficient district heating and cooling systems. Although we don't have that many requirements specifically for the efficient district heating and cooling systems in the Energy Efficiency Directive, this has quite big implications for the other important legislation in the EU, and particularly this legislation that is governing the financing of the various funding programs or funding initiatives in EU or taxation. So this means that when the system doesn't meet the efficiency requirements arising from the Energy Efficiency Directive, it's kind of problematic to get access to the financing in these systems. So this encourages the operators of the district heating and cooling systems to become efficient district heating and cooling systems. And this is a major driver for the decarbonization in the district heating and cooling sector, we believe. There is quite detailed pathway set out in the directive, but I would highlight only 3 moments that are essential on this progressive ambition in the district heating and cooling sector. First of all, as of 2035, the systems that are purely relying on fossil energy supply, such as cogeneration based gas, cogeneration based on natural gas, cannot be any more efficient district heating system. So they must start to integrate more renewables in these systems. As of 2045, it's foreseen that these systems that include fossil fuel-based cogeneration are not any more efficient district heating and cooling systems. So our long-term ambition by 2050 is that all the efficient district heating and cooling systems are purely supplied from the renewable energy or waste heat. So these are the key moments for the development of the definition of efficient district heating and cooling. And together with this definition, there comes into force the requirement that all the large district heating and cooling systems that are above 5 megawatts should regularly prepare a plan how they are converting their existing systems into efficient ones in the future. So this is a requirement that arising from this particular efficiency. Regarding this supportive activities, what the Commission is doing at the moment is, first of all, we must ensure that the member states properly implementing the directive, and this implementation of the directive is ensured. And for this purpose, the Commission is developing various guidelines. These guidelines are telling to the member states or summarizing to the member states what are the key elements of these new requirements that are in the energy efficiency directive. And there is a similar, there is one guidance that is particularly addressing the heating and cooling article 26 of the energy efficiency directive. There are a number of others as well. So we are developing the guidance and publishing it quite soon. So this is the first action that will underline by the Commission as an action supporting the implementation of the EU. Secondly, we have bilateral activities with the member states to ensure that member states get the questions that are related to the implementation of the energy efficiency directive. So we're regularly meeting the member states in the capitals as well in the energy efficiency expert group that is supporting the overall implementation of the ED. Okay. And finally, the concerted action that is also supporting the activity. So regarding the financing initiatives, in our understanding, this portion of the financing that comes from the public sources is relatively significant compared to this contribution that should come from the private sources to achieve our 2030 goal. And the majority of the financing should come from the private sources, it's for the Commission very important to put down, to establish such mechanisms that ensure the delivery of private financing to the energy efficiency. And there are a number of actions in this field. So first of all, there is requirements arising from the efficiency directive. These are targeted to member states. These are designed to ensure that member states have exchange platforms with the financing institutions to ensure that the information exchange between the public authorities and also financial authorities to ensure that there are financing available for the energy efficiency, and there are some reporting requirements for the member states as well. But what's the most recent initiative that the Commission took up was the establishment of the Energy Efficiency Financing Coalition. And this is, first of all, ensuring that we have open dialogue with the financing institutions. We are listening to the financing institutions, how the energy efficiency financing can be improved from the private sector. And there is also a new important element of this energy efficiency financing coalition that we are going to have the national hub. So we are going to need details together with the national administrations to ensure that that there is a right connection between the various stakeholders involved in the financing of the energy efficiency activities. And finally, I wanted to make about the taxonomy regulations. So first of all, what concerns the taxonomy, we don't have that much information what's going on in the field at the moment, the implementation of the taxonomy in the district heating sector. So there are certain requirements set in place, but there are a few other areas where we see that or observe any activity by the private financing institutions that they are interested to implement the instruments that are linked with taxonomy regulation. In the district heating sector, I haven't seen that the private sector initiatives are there. There are some questions that are arising from the taxonomy regulation. There are few things that can be faced to follow the taxonomy regulation and also help the district heating sector to achieve the long-term decarbonization program. But that's briefly all from my side, and I'm to respond to any questions if you have any point. Okay.
I think bit over time, so we won't have time in this time around. Stay here or will you?
Yeah.
Very good.
1.5 hours.
Very good. Okay. Then we'll get a chance to chat. Next up is Helene Vinton from KommuneKredit in Denmark, which is described as a role model for perhaps Germany or the rest of Europe. It's not just because she's a very nice person, but also because she represents a very interesting institution that you present a bit about today. I should also say I have taken off my jacket, so please stay comfortable. I think our discussion works best if you don't pass out. So just do what you feel best for. And then just for the speakers, I think we need. I will ask you about two things. Stand a bit aside from the camera, and please speak up so people in the back can hear you. And for the people at home, we know that they're sitting in your sweatpants anyway, so I'm sure that you are pretty comfortable.
Thank you so much. Thank you for inviting me. Yeah, I'll try to, I think I have 20 minutes. And I'll give you a brief introduction to the business model of KommuneKredit. So KommuneKredit is I want to say it. First, it's a special credit institution, and I'll try to explain what that is. So I'll give a brief description of how we fund our lending and who we lend to. And then primarily I will focus on, I'm a lawyer, and I will focus on KommuneKredit's lending framework. So that is the legislation in place in Denmark, of course, but it's also the EU state aid rules. And those rules are what enable KommuneKredit to finance district heating. This is our simple model, trying to illustrate it. KommuneKredit is a non-profit organization. It's established as an association whose members are all of the Danish municipalities and regions. We consider that KommuneKredit in Denmark, we play a quite important role in helping to develop Danish local communities by providing financing at the lowest possible costs to municipalities and regions. And this we do no matter where in the country, no matter the size of the project, on equal terms. You're not supposed to be able to read all this. You can get it later, but we fund our lending by issuing bonds in the Danish and the international capital markets. And the members, the way it works is the members, that's the 98 municipalities and 5 regions, all of the local governments in Denmark. They are jointly and severally liable for all of KommuneKredit's obligations. That is put down in a special app on KommuneKredit. And this guarantee structure is, of course, an important element in the AAA rating that KommuneKredit has, just in line with the rating of the Kingdom of Denmark. Just a few words on, I won't, as I said, I'll try to spend more time on the regulatory framework, but just a few words on our funding strategy. We strive to ensure diversification on markets, currencies, and funding products, so that we ensure stable access to funding. Our bond issuances are documented in an EMTN program. Our strategic currencies are euros and dollars, US dollars, but we also issue in many other currencies. We also have some private placements when that is, when there's a specific investor demands. Then we have a green bond framework in place. And that is, of course, in combination with our EMTN program. That is how we issue green bonds. And the green bonds, of course, finance a portfolio of green loans. And those loans consist primarily of loans to district heating projects, as well as water and wastewater companies, some clean transportation and energy efficient buildings and so on. Feel free to interrupt if there's time for questions. This is actually, this is just an illustration of many of the loan purposes that we have. It's a lot of local infrastructure. Ferry, it's transportation ferries, coastal protection, all kinds of what is considered public tasks in Denmark. Just mention, just to give you an idea of volume, our lending book, which includes both lending and financial leasing, totals 26.6 billion euros. And out of the 26.6, we've issued loans to district heating projects with an outstanding amount of 5.1 billion euros. And the way it works when we issue loans to district heating projects is usually the company starts out with a construction credit. That's a temporary financing with variable interest rate, where the company can draw, which the company can draw on an ongoing basis during the construction phase. And then when they're done, the final financing is established. And typically that would be a 30-year amortizing loan with a fixed floating interest rate. So all the exciting legal stuff. The regulatory framework actually consists of two parallel sets of rules. So we have the Danish legislation, that is especially our special act on kommunekredit, then combined with, in this case, the Danish legislation on collective heating, and depending on what the loan purpose is. But here, of course, we have a special act on heat supply or collective heating. In Denmark, and then at the same time, we have to comply with EU state aid rules. So starting with the Act on Kommunekredit, this is actually an act dating from 1899. That was when Kommunekredit was established, and it was modernized in 2006. The act, and then again, actually last year, it was updated. But all along, our purpose, that is stated in the Act, has been to provide loans in Denmark to Danish local governments, and then also to certain other Danish enterprises, where such enterprises fulfill a public task, and where the loan is fully guaranteed by one or more local governments. So the fact that our loan is always guaranteed by one or more local government means that we do not take on a credit risk. The municipality cannot go bankrupt in Denmark at least. So in the case of the district heating company, when we receive a request for a loan from such a company, we do not make a credit assessment, nor do we make a business case assessment. We ensure that the municipality in question has issued a 100% loan guarantee. And instead, we, due to our regulatory lending framework, we make a legal assessment. So instead of a credit assessment, we actually spent quite some effort making legal assessments on each and every loan, making sure that the loan is financing a specific type of capital investment that is considered a public task. And so we need to ensure that according to the Danish rule book and as well as the EU state aid rules. And the reason is that with respect to EU law, KommuneKredit is considered a so-called special credit institution. And the reason is that there is an inherent element of subsidy with every loan from KommuneKredit. And that is, of course, the favorable interest rate that we offer. So the difference between the market rate and our rate is considered a subsidy from a state aid perspective. And the way that the EU Commission looks at it is that there's actually subsidy at two levels. So at level 1, you can say KommuneKredit is subsidized in the way that all the municipalities and the regions are jointly and severally liable for our obligations. And that advantage that we get, we channel to our borrowers directly. So yes, we're non-profit. Yeah. So coming back to the Commission's decisions on special credit institution, that is some very clear principles that have been laid out that we make sure that we are in accordance with. Well, the conclusion from the Commission, it can be summarized as these 4 conditions that I've put on the slide. And the first condition is that the loan is issued at the request of the local government. And it always is, because we can only lend out if there's a guarantee, and we look at the guarantee as a request from the local government. Then it's a condition that the loan proceeds are used to fulfill a public task. It's a condition that the special credit institution channels its advantage to the borrowers so that we do not compete with commercial credit institutions. And that is actually inherent in the Act on KommuneKredit. And then finally, and that is what sometimes, or at least it takes some effort to ensure that each and every loan is in line with the state aid rules. And most importantly here, of course, is the assessment of whether, now in this case, district heating is considered a public task. And we found this condition to be fulfilled in Denmark based on an overall assessment of the different elements of the Danish legislation on district heating or the whole collective heating sector. And that is based on, first of all, the fact that there is this legal basis for municipalities to issue loan guarantees to district heating companies, and that applies to no matter how the company is organized. So both publicly owned companies as well as privately owned. There are a lot of cooperatives, consumer-owned district heating companies in Denmark, and they get the same kind of municipal loan guarantee. Then it's also part of the whole framework in Denmark that the municipality, as has just been mentioned, the municipality has the local heat planning competence. And it's the municipality also that approves every project, every new district heating project. And then, of course, there's the element of it's a non-profit activity in Denmark. They all are. They have to be. It's what you call it, a tariff-regulated non-profit principle. So cost and revenues balance, and they all have to apply with that. That was one of the key points, and the other one is a very difficult one. I won't go into details, but since we have to be in line with the state aid rules, the deciding element is actually whether or not there is considered to be competition in a certain area, so that the subsidy that we would grant within our loan, is there a risk of distorting competition? It's, I mean, historically, and this is still the case, the Danish district heating sector has not been liberalized, first of all. Also, the district heating company in a given area has had a de facto monopoly in that area. So that is an area where the municipality has approved this area to be a district heating area. And with that, when it has been approved, then the district heating company also have the heat supply obligation. So it, all in all, it or at least up until recently, we haven't really been in doubt that each of these areas could be considered natural monopolies. But practice from the Commission has changed a bit, and also the Danish regulation actually. So what we're seeing or have been seeing in the last couple of years is that there is actually an increase of the use of individual heat pumps in some areas, and some changes in the Danish legislation, and that has led us. That's perfect, but that's my last slide. That has led us to use this general block exemption regulation from the Commission, the so-called GEBER. At least in every case where we cannot rule out that there is some direct competition, we make use of this special rule book, which allows for the granting of state aid for energy efficient district heating. I don't know if you're familiar with it, but the system is that if there is a particular legal basis in the GEBER, then there's no need to have a prior or you don't need to notify the Commission. So it's the member states' responsibility that all the conditions in this regulation are fulfilled. And that has actually actually in the provisions on aid for district heating has been there for quite some time, but last year the regulation was revised, and the provision on district heating and cooling was changed a bit, and making it or giving a wider and more flexible scope to use. So based on this this way to grant a small amount of aid, it's only the small, the small difference between our interest rate and the market rate. We can use this regulation and then have a solid legal basis for our loans, even though there might be considered to be competition in the area in question.
We have time for one question if anyone has a question. We can save it for later. Anything online?
There is one question online asking which generation you are targeting,
Which
generation of district heating.
generation?
Yeah.
Like what kind of technology?
Yeah.
Well, when we use these state aid rules, we need to ensure that the project is fulfills the definition of energy efficient district heating. All new district heating projects in Denmark do that.
Okay.
But by far.
Okay.
So it's, yeah, you can probably explain more about that, but it's a lot of renewable energy, a lot of heat from waste incineration, big heating pumps. Yeah.
Thank you, Helena. Next up, we have our first participant from the private industry, the fintech sector to be specific. Sebastian Bloch has created a trading platform, which I learned a bit about in the lunch break earlier, and I'm quite intrigued to hear more details about it now. So what's particularly interesting is that this, I think you are venturing in, or the district heating sector is venturing into your platform, or you're venturing into the district heating sector, whatever comes first. And you have some Austrian experiences, I believe, that you may elaborate a bit on.
Yes, we did. Yes, we did. I think my fellow partners would clearly object on your statement that I created that platform. I'm a lawyer, so by definition, I'm the least technical person in that firm. So it's my partners doing it. By at least know what the platform does. So thanks for having me, and thanks for the intro. And when I got confirmation at church many years ago, the priest, eventually hoping I would become a priest myself, said you can preach about whatever you want, but never longer than 12 minutes. I tried to stick to that advice and make good a bit of the time we lost already and speed up a bit. A very long title: Investment and Trading in Platforms for Transition Finance. And I think we heard a lot about, money is there, but needs to be challenged. And we try to help a bit in challenging it. We are not a bank. We don't have a balance sheet. We don't have funds, but we can help to free up a bit of the funds. And the question is, how do we cope with it, and what are the challenges? And I mean, most of them have been mentioned before, so I'm not repeating all of that, but clearly there's immense financing need for that energy transition, being the heating sector or any other green finance or energy transition space. And you can see a bit of the forecast for Germany, and even they are quite aggressive. We talk about 600 billion euros until 2030. We talked, and Tobias, you mentioned McKinsey is always up putting big numbers. They mentioned 7 to 10 trillion. I found 5, so there's always room for bigger numbers. As you know, nobody knows it exactly. So the range is quite big, from 1 to 1.2 to 10 trillion of euros you would need for Germany alone for the entire energy transition. And Toby, you mentioned that as well. Only 22.1 billion have been spent 2022, which only a quarter of what needed to be spent. So we are quite behind the schedule, and there needs to be some acceleration. And that's what Martis, you also mentioned. Public sector spending seems to be insignificant. That's true. Also, the head of KfW Bank, Stefan Wintens, the German State Bank, estimates roughly 90% of the funding needs to come from the private sector. And that alone tells a story about what is needed in terms of mobilization, be it supported by, as we heard a minute ago, state participation and state guarantees, or be it straight debt in whatever dimension it could be. And there are multiple instruments, yes, we spoke about it, which can be used here. And we want to show a bit what is important. And I think standardization, efficiency, market access, and speed are of essence. And I think that's probably, I could stop here and just hand over to the next, because I think that's what we all need. But I will elaborate a bit further on what we can do on that. And I think it's important to understand a bit where are the markets, what are the instruments, and what can be the drivers. I think Regulatory, it's all over. We are in Brussels, so a lot of legislation and regulatory guidance is done here and created here, and it's helpful in many dimensions. But clearly, it also exposes the financial industry to a certain level of costs and uncertainty. And in cope with all the regulation means it also increases indirectly financing costs, which is not to the benefit of energy transition in terms of funding power. And at the same time, there is a higher level and demand of transparency in the markets. There's lots of regulations, clearing of derivatives, central infrastructures, which all add transparency, which helps to make financing cheaper on the other hand, but still that shrinks the margins of the banks. And that again is not for the benefit of the funding power of those financial institutions. And last but not least, own funds requirements, we heard about it, that is all the utilities, you can only lend as much as you have own funds. If your own funds are limited, your lending capacity is limited, so there needs to be a strengthening of that as well. On the same time, which is positive, there are debt funds around, opportunity funds, the investor space is growing, so money is there, needs to be channeled, but the low interest margin environment has gone. So the appetite for investments has been diversified also. So it's not like that people are going for margin and would fund more risky assets, because nowadays you can get decent return on your money with quite secure and low risk investments, state bonds, etc., etc. And what is one pillar clearly which could help in standardization, acceleration, and mobilization of capital? That's clearly digitalization. I mean, we all know that banks nowadays in the B2B business, all of you have online banking. I'm pretty sure you have an app, you send money from here to there in a second. But believe it or not, banks nowadays still operate to a certain degree like in the 80s. Fax machines, emails, very manual, a lot of paper. That is slow, that is time intense, that is cost-wise not the best way to do it. And I think digitalization can help a bit. What are the products you can look at? We talked about bonds. Not all the utilities are capital markets ready. They can't raise money via bonds. The big ones, sure, they could, and we saw E.ON and the others, EDF, they all do green bonds. That's a decent way of doing it, but I think it will be the private placement markets. I'm not running through all of that, rest assured. Just saying these instruments are flexible, they are quick, they can be mobilized for smaller utilities, and they are well known in all European countries. And for example, and very important, they are not that heavily regulated. That means, and very flexible. A loan can have whatever form, shape, and scope and structure, which with bonds is not necessarily the case, because we have a bonds directive which gives certain guidelines what a bond can do. So probably better to look at the loan markets. And then last but not least, in terms of structural issues, costs. Not only that the risk of funding innovative technology in terms of decarbonization carries an inherent risk, and we will hear about later on about how to help banks to measure those risks, because if they can't measure, they can't fund. But still, there's in the distribution, the majority of costs is in getting lenders together, getting people together to fund. And you need to tackle that, but still also the agency, i.e. the maintenance of a loan, even though that looks relatively small, we see a lot of activity in that space as well, because banks need to speed up and need to get more efficient, particularly because they don't have people on the ground to do that work. Yeah, we don't have enough people, and some banks can't even run that. Okay, what is one of the solutions? It's platformization, it's marketplaces. And what are the prerequisites for that? If you do a marketplace, or if you want to provide a digital venue which helps you to run that or to foster that financing of heating change or the entire decarbonization, you want to make sure that you can target all markets in one way. Nowadays, everybody uses Amazon. What would you do if you put Amazon, you couldn't pay, or you couldn't start delivery, or you couldn't start the resending of a product? So you have to have the entire value chain, and you have to have all products. In the good old days, you had a real estate platform, you had a project finance platform, a derivatives platform, and eventually a platform for, I don't know, letters of credit. Nowadays, people expect one venue to capture in terms of efficiency, so you don't have to maintain hundreds of digital venues, which then in turn means replicating data sets, which is very failure prone, and then you will never have consistent data. And at the same time, you want to make sure that you can do everything, that's the Amazon example, in one venue. You want to make sure that all your working steps are workflow-wise replicated in one system, so you don't have to do fax, email, telephone, whatever you need to do. Because this is quick, this is compliant. Banks are struggling with compliance. If your data is not consistent in various systems, the regulator will be very upset, and it's for a reason. And that is the way how you can get data. And Tobias, you spoke about data, not only in terms of predictive data, but also in data correctness and accuracy. That's very important. And that again adds to that Amazon example. I think also in the good old days, fintechs took one piece of the value chain, digitized it, sold it out to the banks. That's not a viable option nowadays. You need to have kind of a trading system, the entire workflow. That's what expected, because only that pays onto the element of acceleration and the element of having a seamless flow. Because if we talk about 1.2 to 10 billion in Germany alone, these are a good number of transactions. And a bank with a limited capacity of people working on those transactions could do a certain amount of transactions per year. But and you can't get bankers out on the street, hundreds of them, because there are not so many bankers around. The only way to do it is per transaction, get it short, get it crisp, get it standardized, get it quick, get it digitized and paperless. And ultimately that all sums up to one thing which we on our journey learned a bit later on than when we started, that it needs both. It needs a marketplace element. That means bringing the lender universe together, bringing the borrowers, bringing the sponsors, bringing rating agencies, bringing the scientific space who could help on providing intelligence on how to value and how to measure risks. And having paperless processes and doing all of that, having a quick onboarding. It can take you 2 years to onboard an international bank. But once you have it, that bank can operate on the platform. If you have 10 platforms and that bank would have to onboard 10 platforms, no way, you will never end up that. It's probably 20 years then, right? Doesn't make sense. And in the infrastructure piece, that means you have to have the workflow, you have to have all functions in one place. You have to have a high connectivity to core bank systems and to other systems to push data through in a meaningful way. And you need to make sure that this can be legally binding in terms of execution. You want to get away from paper because paper doesn't help you. You need, in terms of getting to know what's in your data and what's in your contracts, you only can do that if your contracts are tagged, if your contracts are digitized, so you can analyze it and so you can also find price points, and also in your investor universe, you can find, in terms of investor preferences, the right investors for your investment and make it feasible. And that's the element of the network. And then just quickly on how we did that. And you spoke about Austria, Verbund, the Austrian water power utility. That's was our first transaction back in 2018. It was the first digital green Schuldschein globally. There was a press conference in Vienna, so it was a very nice start for us. And since then, you see obviously many German names, a lot of local utilities who use the platform already. And we are clearly committed to support that energy transition. The platform EC Trade, it is not only limited to private placements in the energy sector. We do loans for corporates, for Lufthansa, for Fraport, Asklepios, for many, many big corporates, but also for the energy sector. And we are committed to help in that journey. Again, we are not a bank, but we can help that banks come together. And as you see, we have some 1,400 institutional investors and banks on the platform, which is probably the biggest network you can have in a digital space. And all of them can be approached with a mouse click. If you have a transaction, you structure it on the platform, you put all the data in, you hit the button, and 1,400 banks, pension funds, insurers will see that transaction, and they can help funding it. And they have investment preferences a bank or insurance could put into the platform. I'm interested in, I would do solar plants, 7 years, only US dollar and only in France. And if you have such a transaction, that insurance company will be your perfect investor. Or if you know a pension fund has done windmills and there is a majority in 1 year's time, you know that pension fund will eventually be interested in funding windmills again in 1 year. So if you're a windmill project, you may want to talk to that pension fund, and all of that data is in the platform, which you would hardly ever have if you wouldn't have it in the platform. While international, I think that's another core constituent. It needs to be international. It doesn't have to have a German platform. It doesn't have to have a French, a Danish, a Swedish platform. It doesn't help. You need to have an international reach because that's an international endeavor. And all in all, it translates into 14,000 individual users using the platform nowadays. And we are glad to manage to already turn around 48 billion of euros in terms of notional on the platform, 350 deals. And I think this is expanding quite neatly at the moment. And we are also talking to regulators, we are talking to KfW and other players in the sustainable space, and try to expand our network with other partners to make it even more viable and helpful for those who are trying to finance the energy transition. Because as said, the money is there, needs to be founded. And I mean, blended finance in terms of standardization can be a way forward because yes, all the transactions and structures can be different. But the more standardized it gets, the better and the quicker it will be. And I mean, a windmill is a windmill is a windmill. Yeah, and a solar plant is a solar plant is a solar plant. Yes, all are different, and the funding structures of the utilities are different. And it's not only that, it can also be mezzanine. It can be Genussrechte under German law. So that means that mezzanine funds, which could help on the equity in as much as on the debt funding side, also that can be placed via the platform. And having said that, I'm through with it. I hope I made a bit of time. And my last advice would be, don't go with the flow. Don't go with the hype. In the very early days when we started, 2016, everybody was talking about blockchain. You remember those days and people were totally confident. Private placement should only be on blockchain. Some 8 years later, probably 2 or 3 have ever been done on a blockchain. Banks can't operate blockchain. Legally wise, compliance wise, practically. They can't run a blockchain for private debt nowadays. And there's always an innovation. It always goes a bit too far. And then you have to come back to the middle grounds where the practitioners can work with it. You can have many, many incredible ideas. If the practitioners can't work with it, it doesn't get you anywhere. So that means, and the same is probably nowadays, you can talk about AI and everything, and it's very helpful and will do a lot of very good things for us. But I think I always suggest to do the groundwork first. Bring a venue in place which is compliant, banks can work with, which is regulatory-wise okay, and which adds benefit in practical terms. And therefore, whenever somebody, and I want to leave you with that thought, if somebody would tell you, we need to do blockchain, or we need to do some other fancy stuff in a regulated industry like banking and financing, be careful first and think of as to whether this would really fly. Our experience is do the basic work first and don't follow the hype, because bankers don't follow the hype. Simple truth. They are bankers.
Thank you, Sebastian.
Right.
I think we'll keep them to afterwards. Now we have our first online speaker, and I've noticed that organizers have actually thought a bit about the agenda, because we have had Helene representing the ones providing sort of the end financing to distributing companies. We have the platform that maybe ties this together with the next speaker, which is Peter Dahl from Polham, who has money for the investments through the pension that they administer.
Okay, thank you very much for letting me come to this meeting and talking to you, even though I'm not in place. Unfortunately, I was away in other business. My name is Peter Dahl, and I work at Polham. And you can ask yourself why I'm here, really. But my background is that I'm from the industry. I'm from I used to be the vice president of the Swedish District Heating Association way back, and I also was the CEO of Finfra, purchasing organization in Sweden for district heating, and transitioned over to the financing side last couple of years here. So basically what I'm going to talk to you about is two things. Polem does, and of course also what we see that we have to do. Keep in mind that we are equity players only. We don't borrow any money. We're not like organised or stuff like that. We try to invest directly into the companies. So what is Polem? Basically, it's the Swedish pension funds. We have 4 of them. 3 of them are owners. We have no other owners. So we have about 900 million euro in allocated capital. We have allocated or deployed that capital into investments, and we've got another 900 million euros that we are trying to find investments for right now. We focus on non-listed companies, so we're only after companies that are privately owned or owned by municipalities, really. We really like to invest together with other parties, both public and private, of course, but municipalities are what we try to establish relationships with. Our investment horizon is very long. We have no exit strategy at all. So we're in it to stay, so to speak. And what our mandate is the Nordic countries. So please keep that in mind as well, because it might be slightly different in other countries. So what are the areas that we're acting in? Basically, it's energy production and energy distribution, digital infra and transport. And as you can see, we put district heating, district cooling in energy distribution. I know there's a lot of production there as well, but we just have to categorize it in this ways. So these are our investment mandates. So going on, we have challenges that we are trying to address. The reasons why Polem Infra was created is basically to answer this challenge. And first, I'm going to just sketch out how this is perceived in Sweden, and then we are going to go into what we think could be done within the financial ecosystems. In Sweden, it's really complex material. Sure, it is in Europe as well, but basically you can boil this down to 3 levels. The macro level, of course, we have crises and wars and stuff like that. Is really messy at the moment. Multipolar world, we are moving away from the globalization that we have been in, the globalization trend that we have been in the last 30 years. And we are almost moving it towards mercantile relations between countries, and that's something that we really haven't had since the 1700s, really. So it's quite strange world we're living in, and it's good to have that in the back of the mind, because it affects also, of course, the financial situations. And on the national level, in Sweden and in Nordic countries, especially Sweden, security has become one of the major driving forces. Of course, this is from a country that has been neutral for 200 years, and suddenly we're in NATO. That's a really big change for us, of course. We are supposed to be self-sufficient, and we're also supposed to have competitive regions within Sweden. And on the local level, there's a lot of climate transformation. We have the 2040 goals. Of course, we have also 2030 goals. And all these funds down right into the laps of the cities and municipalities. And this is where it gets really, really challenging for the cities and municipalities. They have to really make do with a lot of, or I should say, they really have to look into how they spend their resources. So that's the backdrop. And if you look a bit closer towards the district heating companies and also the infrastructure companies in Sweden, we can see there's a tear going on. We have the administration side, difficult word, on the left side on the screen. with long horizons, low risk, low reward. That's something that we all recognize. I think you mentioned it quite a few times here earlier, the speakers. And this is, of course, something that's really interesting for us as well as an equity player. However, a lot of these companies also have to engage in an acceleration side. And this was a study that I did called QTA, and was financed by the innovation authorities in Sweden. And I during this study, a lot of these energy companies and infra companies, also all of them said that they only that they can almost feel the physical tear in the company towards the administrative side or the acceleration side. That is something that's really difficult for the companies to have within the same company. So the conclusion of the report that we did, that you have to choose one of the sides in some sense and try to focus on it. But you can also bring in partners and financial partners, and that's why I am at the moment in Polum Infra trying to figure out how the equity side can get into this equation as well. So moving on, I feel time is running out a bit here. Can investors adapt? I mean, what I just showed you was the reality of the companies that we're trying to invest in. So we are trying to invest in a world that's quite the transformative pressure on, and we're trying to invest in a traditional way, and of course that is not a perfect match. So if you look at the traditional setup, and this is nothing new for you, of course, but you have this risk reward. And notice that you have reversed the axis just to get the risk on the y-axis here. You get this ecosystem that you have today with venture capital, of course, and they have private equity a little bit lower, and then they have the institutional capital, that i.e. Polum and stuff like, and Polum's colleagues, and then you have the bonds, of course, the bonds market. The bonds market is not a way of financing, but it's fairly important, and I think actually communicate speaker touched on that, and I will get back on that. Going to get back on that a bit later on. But this is the ecosystem as it looks today. And of course, these are separated. That's why we have these lines. You have rules and regulations. You have the insider trading rules. Of course, you can't spill information through these barriers, unstructured, so to speak. So that's a real challenge. We think, or what we see right now, that this is an ecosystem that is not really working for the transformation that we are in, and especially actually district heating, district cooling, because district heating, district cooling, even though it's an old business in Sweden, needs to transform as well. But they are kind of stuck in this ecosystem. So what could we do? Well, I just sketched out two scenarios, really. One I call fast track. And basically what that means is the capital owners try to make this a bit tighter. But then again, you need strategic dialogue going through this ecosystem. And that's not a really easy challenge or equation to solve. Because now you're in this information sharing problems also, and of course on the other side, if we need to move fast, which we do, we need to have exit strategies in this falling ecosystem as well. And as you've noticed, I pushed this up a bit on the risk scale. That means that institutional investors like ourselves need to be more risk, have a bigger risk appetite than we usually have. And of course, that's not easy either, because we are institutional capital for a reason. We don't like risk really, and we need a reward that is small but predictable. But this is an equity heavy system, and it could use something that like this to accelerate or to really find these investments that need to be done in a short way of time. But it needs to be propped up with frameworks and of course regulations, some way to not to create a system that where we I should abuse information or capital for that sake either. This is one way that we are at least thinking about. The other way is borrowing from the future, from future generations that I call. Well, this is a debt-heavy system. Basically, we're coming back to Kommunkredit's thoughts here. We have what we call in Sweden Kommuninvest. That's probably similar to Kommunkredit. And what they actually do is they emit bonds. I think they are one of the world's largest emitter of green bonds. And what they do is basically lend those money to the municipalities that in their turn lend money to the municipal-owned companies. And of course, then they can act in this gap between the venture capital and the private capital, because the venture capital here in this case is pushed even further up the risk ladder, so to speak. But then again, in this system, with the municipality-owned companies having been financed with the things that they need to invest in, borrowing money from Kommuninvest, they can create a market for the venture capitalists, and in that sense, you can actually mitigate the risk that you take and get a higher reward, so to speak, for those actors. And of course, then the private sector in the institutional capital just slide down the risk scale and try to take care of the administrative side of the graph I showed you earlier, trying to buy district heating systems or district heating cooling systems and keep those under administration for being used as a platform for the venture capital to create new forms of services and products. So basically, and I think I squeezed this in quite good, and you get your coffee break as well. In this sense, what do we do and what do we aim for? As I said, we're an equity player. We wish to invest directly into the companies. And so having said that creates, or that is necessary, but it is a company that we can invest in. That's not true for all of the Europe's or different district heating, district cooling entities. But it is in Sweden, and it is in the Nordic countries. So it works in the Nordic countries, and actually we have invested in heavily in district heating in our first batch of money that we got. So, and we really wish to invest together with municipalities, and basically that's a way of sharing risk that's for us. And we also want to be an active part in the financial ecosystem, that I call it. We're trying to bridge the gap. We're trying to move around to feel if we can adapt more risk than we usually do. But then we, of course, need a bit more reward, because we are an investing entity that needs to make returns to the pensioners in Sweden. So we can't risk money. We can't adopt very much risk. We need to balance it out with less risk investment as well. Of course, we need to be a part of the future sustainable society as well. So that's basically how we think and what we do for now. And I think that's the broader sense of what can be done with an institutional investor like Ole. So thank you for listening.
Peter?
Yes.
Can you hear us loud and clear? Or how do you?
I hear you.
I think I know we're eating into the coffee break. We will get back at the 4 o'clock. But anyone with a quick question for Peter? We can just have time for one. Okay. Thank you, everybody. We will be back here at 4 o'clock. If you get inspired during the next few talks, you can add your notes on the post-its that relates to the following questions that I'll just read for you. And then we'll have Tim on board in a short while. The first one is, which KPIs along the magic square do you consider necessary or useful for your investment decision making? Examples are ROI, IRR, CO2 emissions, etc. Next one is, what obstacles or difficulties do you see in connection with the taxonomy and the regulatory environment? If you forget what I'm saying, you can just sneak down there and then read on the board. Next one is, in what would need to change in the regulatory environment, taxonomy, Green Deal, ED, RD, so on, to accelerate channeling investments into district heating and cooling networks? The fourth one is, what chances do you see in connection to the taxonomy in accelerating the transition to a low carbon and more sustainable economy? And finally, what would you identify as drivers and barriers of the taxonomy? So that was 5 different questions that you're welcome to just brainstorm on a bit while we're having the next 2 talks. Have a session where DS will facilitate and collect your input. Firstly, we have our next and online. I think our camera is maybe not working, but hopefully you can hear us both. Tim Okenga, from the German insurance industry, which sits on a pile of money that may also go into investment in networks. And on top of that, he has provided important inputs.
Great. Hello and good afternoon. Can you hear me? No reaction. Again, can you hear me?
Hi, Tim. Yeah, we can hear you.
Okay, great. So thanks again for having me. My name is Tim Okenga. I'm head of investments at the German Insurance Association. And unfortunately or luckily, as you might look at it, I'm not investing myself any money. Yeah, I'm just looking for regulatory issues around investments for our members. And I'm very happy to talk to you today on how insurance companies can play an active role as investors in sustainable infrastructure and the European district heating transition. I would have loved to join you in person today, but unfortunately it was not possible for me to make my way to Brussels. So I'm only online with you, but hopefully I can bring my points across to you. So yeah, I would say let's get started with the first slide. So the next slide from this slide. And thank you. And I would like to first have a look at the split of assets of the industry, just to give you a flavor about the significance and also how German insurers are allocated. So insurers are, in fact, the largest institutional investors. And German primary insurers, without the reinsurance business, have total assets of around 1.6 trillion euro. If you combine it with the reinsurance companies that we have in Germany, you end up with 1.9 trillion. And you can see here on the left-hand side at first glance that almost 80% of these investments are allocated to fixed income securities. So mainly government bonds and loans. And by the way, investments in green and social bonds went up 30% over the past years to currently about 2.2% of total investments, which I think is quite a strong development. And since there was also the Schuldscheindarlehen mentioned in the previous presentation today, it might also be of interest for you that insurers have also invested about 1% of total assets in corporate Schuldscheindarlehen. Yeah? So we're not only bond investors, but we're also investing via loans. And so these fixed income securities are mainly long-term, with an average modified duration in excess of 10 and a high credit quality, with an average of 90% of fixed income securities invested in investment-grade securities. And on the other side, the riskier assets only account for about 23% of investments, so equities 5.3%, participations 10.8%, thereof private equity 3.6%, and real estate by 4.6%. Now the question is, why are insurers invested in a, some might say, rather risk-averse way, and what does that mean for the ability to invest in transition assets? To answer this question, I think it's important to have a look at the general requirements for insurers' investments on the next slide. And first of all, here, not surprising, insurers' investment behavior is of course influenced by capital markets, by volatility at the financial markets, by interest rate movements, and so on. But secondly, and probably more important, insurers are so-called liability-driven investors. And that means that the structure of the asset side is mainly defined by the structure of the liability side, so the products. Now, for German insurers, we have basically two main characteristics for the liability side, and that is A, very long-term liabilities, when you think about retirement policies that often run for many decades, and B, fixed nominal guarantees, in particular in the life and health business. And third, like banks, of course, we are also regulators. Insurers fall under the European regulatory regime Solvency II and the prudent person principle. And in short, this means that in relation to the riskiness of the assets, the companies have to hold capital, and also they have to consider the security, quality, liquidity, and profitability of the assets in the portfolio context. And that means that they also have to exactly analyze and understand the risks they are exposing themselves when investing. So it's nothing about what they like to do and would like to do, but they have to really know their risk when investing. That's a regulatory requirement. On the next slide, I have again listed the main requirements purely from the liability side for life insurers that amount for around 2/3 of primary insurers' assets. And when you again look at the specific requirements such as nominal guarantees, long duration, coverage of obligations at all times, it becomes quite clear what the perfect match on the asset side must look like, i.e. investments with a high credit quality, long duration, preferentially in excess of 10 years, and stable cash flows. And a perfect fit for this description are, on the one hand, long-term government bonds, of course, but also, on the alternative side, infrastructure investments. And on the next slide, you can see that this is not only theory, but it's something that happens in practice. About 10 years ago, German insurers had only allocated about 0.2% of their investments in infrastructure. Now, 10 years later, end of 2022, about 5.3% of investments were allocated to infrastructure. In terms of the whole industry, so primary and reinsurance companies together, this means about 100 billion euros in infrastructure, and thereof debt and equity roughly half-half. So what we have here is a real asset class that developed over the past years. And we see continuous interest of the industry to invest in infrastructure. And the reasons for it, you can see here on the slide on the right-hand side, the advantages of infrastructure investments. So attractive returns, including a liquidity premium, and stable cash flows due to inelastic demand and good credit quality for the public sector. To be fair, that's not always the case. Yeah, if you have a government, of course, you have a good, strong credit quality on a basis of municipalities. That's not necessarily always the case. A third, diversification to other investments, in particular to listed instruments such as government bonds. Long duration, often in excess of 20, 30 years, that come along with infrastructure projects, which is also difficult to achieve with the usual corporate and governance bonds. And last but not least, an overall adequate capital requirement under the regulatory regime. Maybe to put a bit more detail on this Solvency II aspect. So for usual infrastructure equity, the capital requirement is about 49%, which is significant. Yeah, it's a lot. But there are also options to defer from it. So there's a bucket called qualified infrastructure equity, and there the capital charge would only be 30%. The downturn is that you have to match certain requirements and criteria, which are not always easy to bring along in terms of data and reporting. But what we've now seen recently is that with the new Solvency II review, there are also good chances that under certain conditions, capital requirements for equity infrastructure could even be as low as 22% if they qualify for long-term equity, which in our view will always, not always, but often be the case. So overall, my message here is that the solvency requirements are roughly adequate and are not really a showstopper for this asset class. And this is, I think, good news for investments of insurers in projects like, for example, the heat transition. On the next slide, you might wonder whether the rising interest rates that we've seen over the past 2 years could mean a barrier for increased infrastructure investments going forward. And this steep rise that we've seen in interest rates, that comes along with many positive effects for the industry, but of course also with challenges that the companies have to deal with. And now looking into this and into more in more detail, first of all, given that Solvency II is a risk-based system, the interest rate increase leads to stronger solvency ratios, because with overall higher interest rates, it's easier to match the nominal guarantees. So this is clearly positive for the companies. And also for new investments, we've seen attractive returns coming back for investments in fixed income securities. So for the fixed income portfolio overall, we estimate the net investment returns of 3 to 4% for the fixed income portfolio on average for last year. However, the interest rate increases also lead to significant unrealized losses on the already existing fixed income securities in the portfolio. And as a consequence, insurers now, I think that's fair to say, focus more on liquidity management maybe than compared to what they did 3 years ago. And following from that, we have seen that over the past 2 years now for new investments, there has been a shift from illiquid alternative investments towards listed fixed income securities with high credit quality in the range of AA rating to AAA rating. So to put it straightforward, effectively more investments into government bonds rather than in infrastructure projects. But this is, and that is important, this is only one side of the coin, and it's a snapshot. Because on the other side, over the past 10 years, where we've seen this profound low interest rate environment, the insurers have changed their product portfolio. So new products in life insurance have often lower or no nominal guarantees. And as these new products feed slowly through the portfolio, the flexibility on the investment side to invest in riskier assets such as infrastructure increases as well. So from my point, the good news here is the trend towards alternative assets such as infrastructure investments remains real and intact. So now on the next slide, maybe let's talk about the challenges. Despite the appetite of insurers and other institutional investors to invest more in sustainable infrastructure projects, actual allocations are relatively low. So from the 100 billion that I mentioned invested in infrastructure, only about 20 billion are currently invested in renewable energies such as wind or solar. And to address this and also other issues around sustainable finance, the German government agreed in 2021 to install the Sustainable Finance Beirat, SFB, which is an advisory board for the German government with relation to sustainable finance issues to advise the government effectively and to help developing Germany into a leading sustainable finance destination. You can see the composition of the SFB here on the right-hand side, how it is made up. We have 34 representatives from the real and financial industry, so managers from banks and insurance companies and asset managers, also from science and civil society. And apart from the members, there's also a number of observers from trade associations and civil societies. And the German Insurance Association, the GDV, is also an observer to the SFB. And I had the honor to represent the GDV and the German insurers over the past 2.5 years in this advisory board. Now, on the next slide, the SFB in Germany has worked now on several topics over the past 2.5 years, including advice on European regulatory initiatives such as the taxonomy, the SFDR, or the ESG rating regulation, but also on developments such as concepts for ESG engagement platforms or adequate consideration of biodiversity. And within this multitude of topics and issues, financing the sustainable transformation is clearly one of the core topics for the SFB. Within the advisory board, this was addressed by 4 distinct project groups that worked on recommendations for enabling transition financing in the areas of industrial companies, SME, Mittelstand, startups, and sustainable finance infrastructure. And that work was set up in interdisciplinary groups consisting of members and observers, and also experts that were brought in on a case-by-case basis. Now, for sustainable infrastructure, I had the privilege to work in that group on sustainable infrastructure. And maybe if we go to the next slide, the challenge in this area is that in Germany we have a federal system with very strong local regions and municipalities. And as a consequence, about 60% of total infrastructure investments are made at the level of local authorities and municipalities. And often it is difficult for them to realize infrastructure projects because they miss out on financial capacities, financial means, but also on expertise how to do it. So therefore, when reading different articles from experts and so on, some say that alone for Germany, public investments in sustainable finance infrastructure, we need investments of about 260 billion euros until 2030. And to be fair, probably the amount is even higher than that. Now, looking at the situation, it is clear that too little is done at the moment. And to address this situation, we provided at the end of last year now a written report with concrete recommendations how to foster investments in sustainable infrastructure. You can download the report on the website of the SFB. However, I have to warn you, it's in German. But anyway, so the main recommendations in the report here are in 3 areas, which I will go to in a minute too. First, legal and procedural. Yes?
A few
Yes,
more
2
minutes, sorry, Tim.
2 more minutes.
Sorry to interrupt.
Okay, that's fine. So it's legal and procedural framework conditions, which is mainly a task for the government really to address because it simply takes too long for infrastructure projects to be developed and realized. Second, equipment and funding for local authorities. And third, investment conditions for private capital. Now, given the time, maybe let's skip the next slide and go directly to the ones on investment conditions for private capital, which is here. Now, we thought that it is important to make just greater use of cooperative partnership models such as public-private partnerships and blended finance concepts, which are not so popular in Germany, other than in France or Italy or the UK. It's unfortunate that we don't have much of it, and we would recommend to make greater use of it. Also, from an investment perspective, it is important because it's expensive to engage in alternative assets, that you have the perspective of a continuous deal flow. So not a one-off, but at the horizon, you have to be able to see that there will be multiple investment opportunities coming up in the next years. And in that respect, to have investable projects with an attractive risk-return profile, we also recommended to further develop the use of funding and guarantee instruments. So in particular, the first loss instruments to make projects investable. Last but not least, here on this slide, of course, also more research should be done on how to trigger investments and avoid misallocations. And in that respect, I think it would also be a good idea to look at best practices that we've seen in other European jurisdictions and come maybe up with some blueprints on how to push forward and foster institutional investments in infrastructure. The last slide, if we skip the next one, the last slide, I would just like to end on a positive note. I think the interest of German insurers in investing in heat transitioning is there, and I would like to end up with an example here that we've seen last year, where in the federal state of Baden-Württemberg, 5 German insurers and 30 savings banks grouped up to acquire a 24.9% stake in the transmission system operator Transnet BW. That investment amounted to avoid 1 billion euro. And I think it's a good example how looking forward investments also in the European heat transition could look like. And therefore, it's about finding the right framework conditions. We are happy to engage and also work on these framework conditions together with every stakeholder. Thank you for your attention.
Thank you, Tim. That was really interesting. We don't have time for questions this time around. Next up, we will have Christina Løgnerud, who will give us an update on the relevance of EU taxonomy for investments in district heating. And perhaps there's a small side note. I quite like the gender balance that we have, at least among the physical participants. Coming from the district heating sector, I'm not used to to that many women in the room, so that's very nice to see. Hopefully, that can be something to teach us in the district heating sector.
Thank you, Daniel. Nice to be here. So I'm here from the research perspective today, and we have heard about policy being mentioned a number of times, and also the EU taxonomy. And I guess everybody in the room and digitally knows what the EU taxonomy is. If not, it's a framework to secure green energy investments. And why am I here? Should I stay here?
Just for the cameras.
I should stay here. Okay, sorry. So why do I know anything about district heating and cooling? I have been in the sector since 2004, and I made my PhD studies on risk management in the sector. Then I worked as a risk manager for one of the Swedish largest utility companies for 5 years. I have been department manager of an energy group where a lot of work was on district heating, and I have led EU projects and been a participant in a number of EU projects on this topic. And I was on REWARDHeat and Power's knowledge platform of district heating and cooling for 6 years on the board. So I know a little bit. I have done some previous work then on waste heat recovery, high and low temperature. I have done work on flexibility sector coupling between electricity and district heating, working with seasonal storages. How can you shift away from production and instead store this asset of waste heat? I have done some advisory to governments, the UK government, the Irish government. I'm on the EU urban agenda and also on this investor dialogue on energy that the EU has. Mainly been working in Europe, have an interesting project in Canada right now. There is district heating in Canada around Vancouver. And we have a first project in India, recovering waste heat to make cooling in New Delhi. So against this backdrop, I have come across the EU taxonomy, and we understood that this is a big elephant in the room, and we didn't understand what will it mean for district heating investments. So we set up a project. And the background was that the city of Gothenburg in Sweden, they issue green bonds, and they were uncertain if the district heating assets were compliant to the green bond criteria. Because usually when you make green bond assessments, you just look at the energy company and you say, okay, it's a municipal company, it does green things, and you don't go into depth and understand the infrastructure. But if you're going to go into the SFRD, I don't remember what it's called now, Sustainability Framework.
And the finance and reporting directive.
Yes, Article 9. You have to also show that you have a real impact in your investments. And then you need to know if the assets are taxonomy aligned. So that's what we try to figure out. And why was this important for Gothenburg? Well, it's an old district heating system. It's a warm district heating system. They have biomass in it. They have waste heat from waste incineration, and they also have waste heat from refineries. And all these elements were discussed in the taxonomy as possibly not being green. And in the team, we had a very nice team. We had investors, we had cities, and we had the energy company. And we also had industry organizations across Europe. So REWARDHeat and Power, the Norwegian Association, the Danish, the Swedish. So a big mixture of people. What did we do? We made a literature review of taxonomy and district heating, and we found that there is barely no information on this topic. We made interviews with a large number of stakeholders, and we made this article review of the taxonomy. It has a number of articles for production, for storage, for whatever. And we went through each and every one of them and tried to understand the implications. And now we are also working still on the policy implications. But what I wanted to share today was this tool that we have made for understanding if you are compliant with the technical screening criteria or not. And here is actually a picture from Mr. Popovich, where he outlines how the taxonomy works. So you have to have a significant contribution to one of 6 goals, and usually for district heating, it's around climate. And you have to have no significant harm in the other 5. And then you have to be compliant with social safeguards, which is like, are you a good company? You don't use child labor, that kind of thing. But then you have to be compliant with the technical screening criteria. And this was then the question in Gothenburg. So to look at this, we built an energy systems model of the system in place in Gothenburg. And then it's a kind of complex model. So you build the reference system, what it looks like, and then you put in a number of assumptions about taxation, inflation, that kind of thing. And out comes then the model, and you see what heat supply you have, what costs you have to run it, what implications you have for CO2. And we made this kind of model for the current energy system. And then, as we have seen today, there are a number of criteria for the EU taxonomy. You are not allowed to emit any CO2 in district heating in 2050, for example. And in these articles in the taxonomy, there are a number of things you need to put into the model that you're not allowed to do. And you also have to put in life cycle data for a lot of things, which we did. And then we run the other model, and then we compare them, and we could conclude some things. So we could see that the district heating assets in Gothenburg, they are taxonomy aligned, check. And the environmental impact is also aligned, check. And as an added information and output, we understood the costs associated with future actions undertaken in the system. So we concluded then that Gothenburg were quite advanced and they had no impact of the taxonomy right now, but they have to keep an eye on the development, because if any of these things happen, that the status of biomass would change, then they are in big trouble. If you can no longer combust waste, they are in trouble. Sorry. In the taxonomy right now, there is an recommendation that you shall not build new waste combustion units, because then you have failed the circularity directive. So that means you have to keep your old assets, but the day you build a new one, you're in trouble with the taxonomy. And there's also a discussion about waste heat. Right now, all waste heat is seen as green, but the discussion is ongoing. Is waste heat from a refinery green? So as soon as that changes, Gothenburg, as an example, would have to do changes. So since this is an investor workshop, I have now been very district heating heavy, but what does it mean for an investor? So it means that for district heating investments, the EU taxonomy does what it's supposed to do. It phases out fossil fuels, but the framework is shaping and there will be new triggers over time that will unstabilize the entire policy. So that's a risk adding to the portfolio. And likely the EU taxonomy will become a mandatory in the future. Right now it's voluntary, but they refer to it in mandatory articles of other parts of the European Union documentation. So soon it will become mandatory. So that will also include district heating and cooling investments. And then if you want to do the really sustainable investments, the Article 9 ones I mentioned, you have to be able to screen the technical assets. And that's going to be very important also for district heating. But we have a tool now. And you have to be constantly on your toes, because this can turn your investment idea upside down. And I'm usually short, so I hope I'm on time.
Well done.
Thank you.
So actually, we do have time for a few questions, because as our first speaker, you were prior to the agenda here in terms of time. So any questions for Christina on the case she studied or the tool she's developed in collaboration with the others?
I wonder why Gothenburg have developed volume, why they're doing volume. How come up with these ideas that municipality owned?
This I don't have the answer to, but they were the first ones in 2013 to do it as a city in Sweden. The reason for that.
But maybe that we had a joint workshop together with them about the project, and it was really interesting for us also the learning curve, and to see as compared to other green bonds out in the market that are really transparent. So there are other green bonds in the market which apply the European Green Bond Directive, but they are not as transparent as they are. And also the framework they developed in 2013 is much stricter than the ones others are applying right now. So my interpretation is that they had a very strong intrinsic motivation for being really green and not running into trouble with greenwashing or something like that. So that was their intrinsic motivation, and also they were using, if I'm not mistaken, the SDGs right from the beginning, and they included them also into that framework.
So they are more advanced than the EU bonds, right?
Exactly.
Yeah, exactly. Yeah.
Exactly.
Thank you. Next up is Chris Garside from Resourceful Futures, who will provide some expert advice on policy recommendations, which leads up really nicely to our next session after that, which will also discuss your views on policy recommendations. So I guess you can warm up the audience and maybe provide some inputs that you can put down on the post-its later on.
Daniel. Hi, everybody. Yeah, when I saw where I am on the schedule, I decided I'd also try and do a bit of a roundup as we're going through of all the excellent contributions we've had so far. Whether that works realizing whether I can read my own handwriting, but we will see. Yeah, you'll detect from the accent from the UK, and I did get here quite sustainably. I cycled from London to Brussels, but not for this thing. It was a month ago. There were 50, about 50 of us cycled across, all sustainability professionals from London to Brussels for Earth Day. So it was a little bit weird to do the same journey in 2.5 hours this morning. But yeah, a bit less tired than last time as well. So it's a great pleasure to be here. In terms of my experience with heat networks, so I'm a specialist heat network lawyer, been working on heat networks for about 15 years now. Also finance and commercialization expert. So I was legal and commercial director of one of the funds that the Green Investment Bank in the UK was investing into heat network and other thermal energy projects. I'm currently an advisor to the UK government on its heat network programme. We're in a very interesting phase at the moment. We are right in the middle of writing our market framework. So yeah, very, very interesting time. And we've got some specific insight, hopefully, on low temperature DH. Also working with Christina with the Irish government, and Christina and I co-founders of a platform called 1021, which is a European-wide collaboration. And the purpose of that platform is to accelerate investment into district heating in general. So we've got other partners, some of whom are here, some are involved in the REWARDHeat project, and hopefully bringing lots of expertise together to accelerate our understanding and investment into this asset class. So I'm going to go through some. I've set this out in quite a generic way. So this presentation should apply to any network anywhere in the world, and then we'll try and build in some of the specifics we've had EU related or Europe wide, and also starting to look at how you can build a policy framework. What sort of policy frameworks do we actually want, and how does that different? How's that different depending on which country you're in as well, and then some ideas on key accelerating actions. So in simple terms, so as I say, try to make this quite generic so it can apply to any country, and also this is quite bottom up. So what do investors want to see? What do we all want to see before we're able to enter a market at scale? So clear market framework. So obviously some of the framework here will be delivered by the EU, but some of it needs to be provided by national governments, and there can be quite significant flavours within particular countries or even at regional level that depend on how these frameworks are put together. But investors will want to see the most consistency possible. So if we've got lots of different regimes between countries or inter-country, that can start to put investors off. Clear on the role of government. So where is the government intervening here? Where is it stepping aside? So we heard, for instance, from Tim, from the insurance perspective, that he thinks PPPs are a good model. But are those models consistent across the European level? If they're all different, they take a lot of getting used to from an investor perspective. Are you going to actually exclude the private sector to some extent, or have a ratio on public sector involvement, like we've seen in the Netherlands recently, which can start to cause confusion? Joined up thinking on policy levels. So with district heating, you're going to have a European level, you're going to have a national level, you're going to have a regional level and a municipal level. If those levels are not speaking to each other properly, again, you're going to get a lot of confusion from investor perspectives. It needs to be stable. District heating is a long-dated asset, as we heard earlier. It has a high capex, high initial capex. So if you don't get a stable framework, investors will be put off, they'll look elsewhere. And well informed. So we're here specifically looking at lower temperature district heating systems. So how are we actually helping all those investors come to terms with that asset class? So who are the stakeholders in this? Very specifically, we've got heat sources, and that has particular complications when we're talking about people who don't normally provide heat as their core business. So let's keep that in mind. We've got project sponsors, which can be a wide range of different participants. Local government will always play some role, even if it's just a planning role. And we've got existing heat networks because they might be the people who are expanding into the new low temperature systems. And then we've got what I like to think as the primary stakeholder, the end user. So none of this is happening if you haven't delivered something that effectively is provided at the right price in an acceptable fashion to the end user demand. The rest of it can fall away if you don't get that bit right. And then we've got what we could call enablers. We've got public and private funders, local grids, because we're going to have some heat pumps in this system, builders and operators, and supporting professional services. And then we've got the sorts of risks that might require a policy intervention. And some of them are really specific. So how do we get well-priced heat in? So in the UK, we're actually looking at mandating heat sources to join networks. And we're also looking at mandating a national pricing system for that, which some people would say is going quite far, but actually, I'm quite pleased it's made it through, to be honest. Then we've got the same question with power. So how are you going to jostle for position against all the other requirements on local power grids? Is district heating going to be seen as a special case because it has a balancing capability? Strong end user demand. So in the UK, we're going to mandate public sector and large commercial loads to join networks. That's a move that's considered controversial in some countries. Well-priced finance. So we've heard lots and lots, of course, about blending different types of finance. And the overall message from today seems to be, if you're going to blend finance together, then we should probably work out what a good blending looks like for low temperature district heating. Because if we all have a different idea, then each investor's got to go and get used to all our different ideas. A viable operation cost base, that comes partly back to power, but it comes back to things like local taxation. Construction, making it easy as possible. There's a technical guy I work with in the UK, and he loves telling everybody that his contingency on the main build is about 20%. On the buried network, it's 50%. And that's enough to blow your IRR straight away if you've got some big swing factor like that in there. So how do we get these things in the ground physically most efficiently? And how do we take the barriers out of the way? And then there's building capacity from a really low starting point. So we're going to go from a 10 million scheme to a 100 million scheme. How do we actually provide the capacity in the system so that you are delivering something at the price that we said we were going to deliver it at? So this is just a slightly different way of putting that build up. But the end point, I think, is the important thing. How do we then ensure we've got a pool of investors who got used to all of that stuff above it, and they're ready to start investing? And then how much of this is hardcore policy? How much of this is stick carrot? And how much of this is overall support that might not be strictly policy? It's just government-led support. So I've just put some examples in here. There are loads. We could fill this page, and the next slide is going to be even messier. But this starts to hopefully give you some clues on or ideas on how many different areas need to be pieced together here to make this a coherent policy framework. And where these things sit might differ depending on your country's utility traditions as well. So this is the messy one. That is a relatively accurate representation of the number of conversations I'm in the UK market framework discussions at the moment. And we've sort of decided we need to come up with answers on most of them for it to be a coherent market framework and a coherent entry point for everybody who we want to come into the market. And you can see within each of those questions are a series of sub-questions that different people here will be familiar to in different depths. But if you don't come to some sort of landing point on pretty much all of them, then you've got uncertainty. And investors are going to say, well, I can go and do that offshore wind turbine there, and that feels a lot easier. So I think we do have to get used to the idea with this particular asset class that we need to get to some sort of answer on a lot of those issues. And there are positions to be taken that really, I think, will differ per country. So yes, the EU level is really helpful on some really core items like heat planning, for instance. But then it might be that national governments decide to take bespoke positions for particular reasons. And this is just an example then going into minutiae again of, okay, this is low temperature district heating. We want to release lots of heat sources into the system. I like to think of it as a cocktail shaker, and we're going on the top shelf of the bar. And we're saying, what are we putting in our cocktail shaker so that we serve an acceptable drink to the customer at the end of it? And that helps me get through long nights looking at regulation. So wastewater treatment plant, great example. So in the UK, we've started to discuss, well, just a minute, this is a top priority heat source. It's going to be there. It's a really strong counterparty. So it's not like the glass factory where it might close down next week. We can go and have a sensible conversation with the water company about 20 heat sources. But then how do we pass that knowledge on? How do we get 50 of those connections in the first year across the country? If we're going to do this thing at speed, there needs to be really clear assistance and cross-fertilization on how we unleash each of these heat sources into the networks. And as I said before, we need to remember that these heat sources, this is not their core business. What they're interested in this place is being a wastewater treatment plant. So we're trying to take the heat and saying it's really logical, don't waste that heat, we want it in our networks, but how practically do we actually do that per heat source? So this is just some thoughts on how this builds up. So the first one I think is really important. I think it's where we are now, we're honest about it in a lot of cases. I would distinguish between greenfield and brownfield countries and more mature networks. So with a mature network, you've probably got a lot of the structures in place already. So you can start to play around at the peripheries of your network and start to build low temperature extensions. If you're starting from scratch, then you're staring at the whole problem in one go. So in the UK, the grant funding scheme prohibits now use of gas CHP, which was the dominant technology before. So the whole of the industry is looking on saying, okay, we've now got to get used to the new world, having not actually untapped much of the new world at all. So we think, so with 1021, with all the partners we're working with here, playing around with this, talking to each other, actually exchanging knowledge and realities as well. Because if people can see the real returns coming out of projects that are actually happening, it builds confidence a lot more quickly than a paper-based exercise. Making sure that we have a viable, replicable economic model. So in each country, that means getting your heat in at the right price and your power at the right price with an end product to the customer that's at the right price. And that's the simple equation. Now, within that equation, there are all sorts of tunes that can be played in terms of tax incentives, fiscal incentives, grant support. But if you go outside those tram lines, you haven't got an investable project. So what is the national version of that equation? And then what are the policy frameworks you do need to put in place? So we've got what's at the EU level, what needs to happen at national level. Now, I'm going to argue here that you do need to go back to that messy slide and you do need to do as much of it as possible, because if you don't, you're leaving those issues hanging out at project level. And that means that everybody's going to get used to it at project level. Whereas if you've dealt with it at national level, then it's clearer to everybody how you come in. And then once you've got your policy framework, there's lots that can be done, I think, around vehicles for practical support. So the Irish government, the UK government, plenty of different organisations and governments around Europe are putting in place some sort of heat development unit or heat policy unit or practical assistance programmes. And I think they're going to be critical in starting to piece all this together at the practical level. And then again, we come like the other slide to the end point, make sure we've got that pool of investors together. And to go back to this blended point, we talk a lot about blended finance, but what does the low temperature district heating blended finance product actually look like, and who's driving the formation of that? So this is the final slide, loads of question marks. But to set us up for the conversation we're about to have. So you might agree with me, you might not. You might say we can pick at this at a regional level. You might say we can park some of the issues. But district heating, I think, as an asset class, one of its features is it interacts with lots of different stakeholders. And it's always going to be a bit different to, standalone solar, standalone offshore wind because of that. So what are the policies we need to have in place to get to the end result of investors being willing to sign really big checks for really big projects? And that, I think, is it. Thank you.
Thank you, Chris. It's such a pleasure to have someone condense what's been in my mind, at least for quite a while, in terms of the complexity of the district heating sector and how you can maybe go about addressing it. We have a bit of time before the next session, which means 2 minutes, equaling roughly one question. Any questions here from the audience or online? No? I think that leaves us a bit more time for the next session, which is really nice because we can spend time on getting a bit more in depth with the basically solving all the issues that you just presented So we're gonna lock the door and not leave the room before you've solved it. Sort of. No,
A small question. And we got just thinking, talking, when you're talking, I have a small questions about, we talked about the neighbors and how we should do the game, but how do you think about the utilities themselves, which are the main driver, main operator, the inside? Do they have an intensive to make all this possible?
Utilities.
Yes.
Yeah.
And I'm not sure about.
Yeah, so I think one of the things, one of the interesting things I think district heating is, it's not entirely clear, depending on which country you're in, who is actually going to deliver the district heating. So in the UK, for instance, we've got a mix of utility companies looking at it, but then we've got startup operations with, let's say, private equity investors behind them. And so we have I forget the name of it now, there's so many acronyms going on in my head at the moment, but there's basically a group of all these people helping advise the government on what they want, and they're all asking for completely different things, depending on their position.
That's my point.
Yeah. So yeah, the team I'm on, so we're literally going through all these requests and sort of saying, well, where's the truth here? And it's I think we've got to also not underestimate, especially for those greenfield and brownfield countries, how much we're talking about here. We're talking about delivering a whole new utility. And yeah, Denmark, Sweden, you're very lucky. You've kind of gone through the first part of that cycle already. But in those countries where it isn't, this is why I think market framework is so important. 15 years ago, when I was a junior heat network lawyer, we went to a senior barrister in the UK saying, we've got no regulation, we've got no market framework. What do we do? And it's taken 15 years for, I'm not quite there yet, for all those questions to be taken off the table. But once that market framework is in place, the hope is it's not about individual utilities. We know what the stadium looks like, we know what the pitch looks like, we know what the referee looks like. So let's go and have some sort of game of district heating.
I work with a lot in UK. Also coming actually from Gothenburg, being in school in Asperbergsgatan, so that was a funny coincidence. But it's and I so much felt the boroughs lack competence and resource. So you talk to no one.
In terms of the
In talk to the one who needs to coordinate this a bit.
Yeah.
It might be one person with 2 years experience. That's their energy department.
Yeah. So again, and I think that's an interesting thing in terms of different national approaches,
Yeah.
because in the UK, we started off in the same place as Sweden 100 years ago with municipal energy companies, but we diverged, and then we've got privatised individual utilities, and then everybody turned around to the local authorities and said, "You're it for district heating," but they don't have an infrastructure team.
I work for utility. I work for E.ON, so I try to come on. We need to get going, and who should we talk to?
Yeah. So there's really active discussions there about whether the local authority should be there as a commercial party in these things, or whether it should retreat to a planning role. But then some of those questions are controversial. Like we've seen in the Netherlands, haven't we, where it's okay, 51% public ownership, please.
Yeah, but it's different. Yeah, we can take that discussion because you need some planning as well.
It's wonderful that you have questions and wants to discuss. Maybe you can sort of merge it into the next session, which will be the interactive session.